All right, let's dive right in. We need to have a serious talk about retirement. You see, for decades, the promise was pretty simple. You work hard, you put in your time, and you'll be taken care of. But that promise, it's starting to fray. So think of this as your critical briefing on what's really happening with your financial future.
And this, right here, is the fundamental shift we are all living through. Our parents' generation, they lived in a world of guaranteed pensions, a predictable check that just showed up like clockwork. Our reality, though, it's all about individual responsibility. That old safety net has been completely rewired, and the burden, well, it's shifted directly onto our shoulders.
So what's the reason for this massive shift? Well, it's actually pretty simple, but it's profound. The systems that supported our parents, these huge national piggy banks, they're under an incredible amount of strain. The old math just doesn't add up anymore. And from a planning perspective, we have to understand exactly why.
To really get to the bottom of this, we're going to put on our policy analyst hats for a moment. We've pinpointed 4 major systemic flaws. Think of them as 4 deep cracks that are shaking the very foundation of traditional retirement.
Okay, the first crack is what we call the demographic time bomb. You see, the original pension systems were built like a pyramid. You had a huge base of young workers, all paying in to support a much smaller group of retirees at the top. The problem is that pyramid is starting to flip upside down.
And look, this isn't some abstract theory about the future. Just look at Japan, which is kind of like a window into where we're all headed. Right now, 1 out of every 3 people there is over the age of 65. When you have fewer workers and more retirees, the money coming in just can't keep up with the money that needs to go out. It's simple math.
The second crack is inflation. We call it the silent thief for a reason. Because even if the dollar amount in your retirement account stays the same, its actual value, what you can buy with it, is constantly being eaten away, bit by bit, year after year.
This slide makes that abstract idea painfully real. Think about it. A burger that cost you $2 back in 2000 is around $6 today. And if that trend keeps going, we could be looking at $12 or even more by 2044. So here's the key takeaway. If your retirement savings aren't growing faster than the price of a burger, you're actually losing money every single day.
Now, all this pressure to beat inflation leads us directly to our third crack, desperate risk-taking. For years, interest rates have been historically low, making it almost impossible for big pension funds to get those steady, safe returns they need. So what do? They're forced to hunt for higher returns in much, much riskier places.
So what you're seeing is this huge shift in strategy. Funds that used to just park money in safe government bonds are now pouring billions into aggressive private equity and hedge funds. These are investment vehicles that take on a lot more risk, hoping for a bigger payday. But that risk can backfire, leading to situations where a company like Toys R Us gets loaded with debt and driven into bankruptcy, making the whole system that much more fragile. And the fourth crack? Austerity. This is basically what happens when the government's well starts to run dry. It's a set of policies that usually means either raising taxes or, more often, making some really painful cuts to public services, and that includes the pension benefits people were counting on.
Okay, so that's the diagnosis. I know, it's a sobering picture. But understanding the problem is always the first step to fixing it. So now, let's pivot and talk about your new mandate. It requires a really fundamental shift in how you think, moving away from just seeking stability to actively building true security.
This slide just lays it out perfectly. Stability is about getting by. It means you're relying on these external systems, and as we've seen, that can be fragile. Security, on the other hand, is about thriving. It comes from building your own systems, which makes you resilient. And let me be clear, making this jump is no longer optional, it's mandatory.
So how in the world do you make that leap? Well, it requires a plan. It requires a playbook. So let's get into the Citizen's Playbook, a clear, actionable guide to building your own financial security in this brand new world.
You know, it really boils down to these 3 steps. First, you just have to acknowledge this new reality. Accept that you are in the driver's seat now. Second, you have to build what we call your special box, which is basically a protected collection of your own assets. And third, you have to invest. Not just once in a while, but consistently over time.
Now, a really powerful tactic for that third step is something called dollar cost averaging. I know the name sounds a little intimidating, but don't let it fool you. The idea is incredibly simple. By investing smaller amounts of money on a regular schedule, you smooth out all the wild bumps of the market. It's about building wealth steadily without all the stress of trying to perfectly time the market.
As you start down this path,
you're going to encounter some skepticism. People might have their doubts. When you do, I want you to remember this quote. The old system was built on a certain set of limits. Your future doesn't have to be. Taking control of your financial education, of your future, that is absolutely within your power.
So we'll end with this question. The ultimate goal here isn't just to retire, it's to achieve freedom. All the information we've covered today isn't really just about money. It's about designing a life where work becomes a choice, not something you have to do your entire life just to survive. The real question is, how will you design yours?